And welcome to everybody. My name's Stephen Michael. I am the interim CEO of Vimy Resources. I've been in the seat now for a little over 2 months, so this is my first major public presentation on Vimy, and I thought it was a good opportunity, given it's my first outing, for investors who might be new to the story as well, to give them an overview of Vimy Resources. So at a glance, our primary project is the Mulga Rock project in Western Australia, which is on track to be Australia's next uranium development mine, with production scheduled for 2025. We've commenced early works this year on the project in the last couple of months, and that will continue on from here forward. Based on the DFS, which we completed in 2020, the mine should produce around 3.5 million pounds per annum at cash costs of $26 a pound. And importantly, we have a high-grade resources, 42 million pounds at an average of 835 ppm U3O8. Corporately, we've had a fair few changes at the company in the last few months. We are recruiting board and management with significant uranium experience, mine development experience, and commercial and corporate experience. With the run-up in the uranium price and our share price over the last 3 to 4 months, we now have a market capitalisation of around $300 million. And at the end of September, we had $22 million cash in the bank. So well funded to complete our early works program. A lot of this has been driven by the uranium market, and as Murray's said in the previous presentation, the uranium price has performed very well this year, up around over 80% calendar year to date, driven a lot by physical buying in the market with Sprott's Physical Uranium Trust, and even the recent announcement by Kazatomprom that it's getting involved in a physical uranium fund as well. And I'll touch on this a bit later, but we've seen a lot of increase in news flow to do with uranium and the nuclear energy sector, the COP26 conference, as well as other reports that have been released recently to do with greenhouse gas emissions. So in addition to the Mulga Rock project, Vimy has 2 other projects, the Alligator River project in the Northern Territory, which is an emerging high-grade project, and we have the Great Victoria Desert project, which is a base metal exploration project, which is adjacent to the Mulga Rock project. So Vimy, as I said, we're now at a $300 million market cap, having risen quite significantly over the last few months. I'd like to say that was coincident with me coming on board as interim CEO, but I think it's fair to say that it's largely uranium price driven. We've seen the uranium price up significantly in the last few months. Register-wise, we have quite a broad range of shareholders. We have a few significant shareholders: Paradise Funds out of Sydney, a private investor, Lexband, and Forest Family Investments owns circa 5%. And we have a good smattering of institutions and retail investors, as well as directors and management involved. So as I said, we've changed a few faces on this slide over the last couple of months. The board, we've had the introduction of Wayne Bramwell to the board recently. He is an executive director at Westgold, and is a metallurgist and mineral economist, and brings a lot of experience to the board. On the operating side, we've seen people like Paula Arthur, manager of approvals and ESG, in the team, as well as importantly people like Scott Hyman in the US, who ex-Cameco uranium marketing agent, so he's our VP of sales and marketing based in the US. So Mulga Rock, it's 290 kilometres as the crow flies from Kalgoorlie, sits just off the Tropicana Haul Road on the way to the Tropicana gold mine. It was a uranium deposit discovered in the 70s by a Japanese group, and it's been owned by Vimy for the last decade or so and been developed. In 2018, the company had completed a definitive feasibility study on the project. We then increased the NPV of the project with the DFS refresh in 2020, which focused on bringing the capital cost down, but also process and operating improvements to reduce operating costs at that point in time. And in 2020, using a $55 uranium price, the project had an NPV of a little over 600 million Aussie dollars. This year, we have achieved significant progress on the approvals for the project, culminating recently in the mining proposal being approved by the Department of Mines in Western Australia. And over the next few years, our plan is to undertake a bankable feasibility study and project financing in 2022. which will lead to a 2-year mine development phase over 23 and 24, leading to first uranium production in 2025. So over the last 12 months, we've had significant progress, as I said, specifically in our approvals. We've had the project management plan, which is the overarching safety plan, approved. We've had the mining proposal and mine closure plan approved, and that has allowed us to now move into the first phase of the early works program, which commenced about 4 months ago and is progressing as we speak. We've also continued to work on the process flow sheet, including optimization of the uranium recovery circuit, but also working on the base metal process plant. Our uranium ore body contains a significant amount of base metals, and part of our plan into 2022 is to continue to work on the recovery of those base metals, which will also help our tailings facility to have less volume in it, but also potentially have some dry tails as well. And with Scott in the US, we have commenced offtake discussions, which will help lead into project financing next year. So the early works program kicked off a few months ago. We're using a earthworks contractor based out of Bunbury, which is in the southwest of Western Australia. So one of the first things we had to do was to refurbish the landing area, and you can see in the top right there, that was the maiden flight about 2 months ago. So we're now having fly in, fly out operations out of Bunbury, which is about an 1.5 hour flight versus an 8-hour round trip flying to Kalgoorlie and driving out to site. So it saved us considerable time. We've re-established the water infrastructure on site. We've reopened the 30-man camp, the exploration camp on site, and we've started the earthworks. You can see there in the picture on the left, that was taken about a month ago, and to date we have cleared just over 100,000 hectares of vegetation, and we've started removing the topsoil and subsoil on the Ambassador North pit as well as the Princess pit. And you might be able to make out in that picture there a couple of mining trucks on the ground. So you know the scale of what we've done so far is quite substantial, and our plan is to continue the early works program into the end of this year, break over Christmas, and then resume in January next year. In terms of the process flow sheet, we've completed a fair amount of testing in conjunction with ANSTO, and it's a very simple, from a uranium perspective, quite a simple flow sheet that we've developed, conventional ion exchange and resin and pulp, and we're continuing to work on enhancements on the resin and pulp circuit to see if we can reduce operating costs by using different resins, etc. So just looking at the DFS that was completed in 2020, some broad metrics on the project. We've got a 15-year mine life producing around 3.5 million pounds per annum. In the early years, where we've got slightly higher grade, the operating cost will be around $23 a pound. Life of mine, we're forecasting $26 a pound. That does not include base metal credits. And in 2020, the capital cost was just shy of 300 million Australian dollars. And at a $55 US uranium price, our NPV was just over $600 million. We've continued to work on the project, and the base metals has the potential to produce quite a significant credit to the operation, and we're going to be doing more work on that next year, as well as continuing the metallurgical optimization next year as well. But the key attributes of this project is its simple geology. The ore body sits about 40 meters below surface. It's simple mining, free digging, no drill and blast with low dilution. And the MET work that we're doing, the pilot plant, it's off-the-shelf technology and proven uranium technology. And importantly, outside of the first 18 months, where we'll have an above-ground tailings facility, the remaining tails will be deposited back into the pit void. So environmentally, a much more sensitive way to deposit tails. Our second uranium project, Alligator River in the Northern Territory, it's a high-grade area. We have an inferred resource at angularity of 26 million pounds at 1.3% U3O8, so 1300 ppm, very high grade. We've been affected by COVID, given it's in Arnhem Land. We've had limited access to the site over the last 2 years. So we've completed some airborne surveys, and just recently we've had a crew out there undertaking some soil sampling and analysis fine fractions, ultra-fine fractions. Those results are pending, and we've also started some test work on some ore sorting as well. So the plan is to return to the project next year once we, hopefully with COVID impacts being lower, we should be able to get there and do some more field work. But importantly, during 2021, we completed the acquisition of Rio Tinto's minority stake in the project. So we now have 100% interest in all of our tenements at Alligator River. Just touching briefly on uranium sector, this is a chart that was published last week by the United Nations Economic Commission for Europe. And what it shows here is the greenhouse gas emissions in grams per CO2 equivalent per kilowatt hour for a range of energy sources. And if we just zoom into the left-hand side, you'll see that nuclear at 5 to 6 grams per CO2 equivalent is by far the lowest of all of the energy sources. And when you consider that the renewables on their wind, solar, hydro do not include any kind of battery storage, they really aren't usable for baseload energy. So when you're talking about baseload energy production and in terms of greenhouse gas emissions, you're really comparing nuclear at 5 to 6 grams per CO2 equivalent to the grey bars on the right for natural gas and coal, which is anywhere from 100 to over 1,000. So nuclear is back in terms of the global agenda. And we've seen over the last few months quite a few newspaper articles and countries reaffirming their commitment to nuclear power. UK, France, Japan and others have all made commitments to nuclear power. And as I said at the start, people like Sprott and Kazatomprom are having investing in physical uranium funds, which is having a positive impact as well. So over the next 12 months, we've got a lot of work to do to get this project into production by 2025. And so all of these parts of the puzzle will come together, leading into a final investment decision in 2022, including continuation of the early works program that we're undertaking at the moment. Importantly, permitting and approvals will continue into next year. We've commenced offtake discussions. The recruitment is key for us to build our team to build this project, with a bankable feasibility study to be completed next year and as I said, leading into FID. So why Vimy Resources? We are in a tier 1 mining jurisdiction in Australia. We've got simple mining and off-the-shelf processing, which leads to low capital costs. Our high reserve grade and high level of recoveries at 87% leads to lower operating costs. The permitting is well advanced and the permitting is on track to enable us to meet our development timetable. The project development is underway. First production is earmarked for 2025 and the early works we're doing now are on track to lead us to that point. ESG, the buzzword for the last few years, is really the key driver of change. We've seen it at the COP26 conference and the focus globally on greenhouse gas emissions. And the global change in sentiment for nuclear power as the baseload energy of choice is becoming a lot more apparent. And we've seen the recent tightness in the uranium market on the supply side has led to quite a significant increase in spot price. And we see that continuing into the future. So thank you very much for listening to the Vimy Resources story.